Ladies and gentlemen, good day and welcome to the Tinna Rubber and Infrastructure Limited Q3 FY26 earnings conference call hosted by Go India Advisors LLP. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors LLP. Thank you, and over to you, ma'am.
Thank you, Anushka. Good afternoon, everybody, and welcome to Tinna Rubber and Infrastructure Limited's earnings call to discuss the Q3 and 9-month FY26 results. We have on the call Mr. Gaurav Sekhri, Joint Managing Director, Mr. Subodh Kumar, Chief Operating Officer, and Mr. Ravindra Chhabra, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Gaurav Sekhri to take us through the business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Sana. Am I audible okay?
Yes, sir.
Thank you. Good afternoon, everyone. Thank you for joining us today on this call. Our financial results and earnings presentation are available on our website and on the stock exchanges. I believe you have had a chance to review the same. I will briefly take you through the strategic updates, post which my colleague Subodh, our COO, will take over and give details about the operational and financial performance highlights for the quarter. I am pleased to share that Tinna has achieved strong EBITDA margins of 16% plus both on quarterly and 9-month ending basis, reflecting our robust performance and continued operational efficiencies. Tinna Rubber continues to progress steadily towards Vision 2028, which is to achieve 1,000 crore of revenue by FY28, enhancing our profitability by over 33%, and with having a target EBITDA margin of 18% plus, with ROCE exceeding 30%. Outlined below are the key strategic updates that support the company's progress towards achieving Vision 28. Am I audible? Sana, can you clarify?
Yes, sir, you're loud and clear.
Okay, I just got a strange beeping sound in between. Anyway, here are the strategic updates. I'm happy to share that Tinna has received a 2-year work order from Indian Oil Corporation.
The line for the management has been disconnected. Please stay connected till I rejoin the management. Thank you for waiting patiently. The management's line has been connected. Sir, you can proceed.
Hi. So I will continue. We have received a 2-year work order from Indian Oil Corporation. The value of this is approximately 76 crores, which helps us meet our targets on the infra business for this year. On the capex front, the company has completed capital expenditure of approximately 79 crores during 9-month period of FY26. In addition, a further capex of around 50 crores is planned to be incurred over the balance of FY26 and in FY27. Substantial progress has been made in the deployment of QIP proceeds, with only about 45 odd lakh rupees balance. On the cost reduction front, renewable energy capacity is being scaled up more than threefold from 1.23 megawatt to 4.48 megawatt, with completion targeted by end of Q4 of FY26. Renewable energy accounted for 24% of total power consumption in 9-month period and is targeted to rise to 32% by end of FY26 and over 50% by FY27 end, aligning us with our ESG goals. These initiatives are expected to deliver savings of approximately 4 crores in FY26, with solar power already contributing 2 crores plus in the 9-month period. Tinna has also allocated 5 crores towards R&D expenditure in order to be future ready. Tinna has initiated a comprehensive life cycle assessment study to measure GHG emissions from tire recycling and conversion into recycled rubber material. The report is expected to be completed by end of this financial year. A brief update on the various projects. I am pleased to inform Varale plant is now operating at 80% capacity utilization, supported by strong post-monsoon demand from infra and consumer segments. The PCMB business has been slow to contribute and is at only around 4% contribution in the 9-month period of FY26 and is operating currently at around 40% capacity utilization. We expect the capacity utilization to improve to approximately 45% by end of FY26, and the division is targeting annual revenue contribution of almost 8 to 10% in the next financial year. The pyrolysis and RCB project is progressing as per plan. We expect trial runs to commence by the end of Q4 26. Significant equipment upgrades and process enhancements have been undertaken to deliver best-in-class quality of RCB. The project is planned as a fully integrated operation spanning tire recycling through to powdered and pelletized RCB production. On TP Buildtech, I would like to share that the strategic growth initiatives are underway with introduction of 3 new construction chemical product lines: grout repair, mold release agents, and accelerator. We expect all of these products to contribute substantially in the coming financial year. Also, the new plant commissioned in Kolkata, which is our 3rd plant, is still in the stabilization phase, currently operating at a low 15% to 20% capacity utilization, but we expect this to improve over the next 2 to 3 quarters. On the international projects in Oman, the plant is operating at 80% capacity utilization up to 9-month period FY26. It has achieved revenue of 25 crores and 40% of sales are within the GCC region, and we are targeting this to rise to 70% by Q4 or Q1 of next year. A 20% reduction in ELT cost is also targeted in Q4 of 26, supporting margin and profitability improvement. In Saudi, a plot of 13,000 square meters has been allotted to us for setting up a 24,000 ton per annum tire recycling facility.
The line for the management has been disconnected. Please stay connected till I rejoin the management. Thank you for waiting patiently. The management's line has been connected again. Sir, you may proceed.
Yeah, so Gaurav Sekhri here. I'll continue. In Saudi Arabia, a 13,000 square meter plot has been allotted for a 24,000 ton per annum recycling facility. We expect the project to commence. We expect to commence work on site from mid of FY27. The project timeline has been recalibrated to align with the ongoing expansion in Oman and South Africa, with all requisite approvals in place. In regards to South Africa, the phase 1 capex has been completed and operations have commenced for cutting, baling, shredding, and exporting of processed material for onward recycling in India. In phase 2, which is full scale of recycling, we expect to take this work up in the coming financial year. As of now, the South Africa venture is losing money, but we are expecting to stabilize, and we expect to begin breaking even in our operations from Q2 of FY 27. With that, I would like to hand over to Subodh for his insights on operational and financial performance. Go ahead, Subodh.
Thank you, Gauravji. Good afternoon, everyone. Regarding our operational performance, tire crushing volumes have grown by 25% on quarter-on-quarter basis and 7% on 9-month basis, supported by post-monsoon recovery in demand across infrastructure and consumer sector. Also, it is worth mentioning that exports continue to be the strong growth catalyst, with the company targeting a robust 30% volume increase by end of Q4 FY26. In 9 months of the financial year, the industrial, consumer and steel segments recorded revenue growth, while the infrastructure segment witnessed moderation, primarily due to strategic shift towards value-added products. The industrial segment recorded a strong 18% YOY revenue growth. Despite global economic headwinds, export volume increased by 20% on year-on-year basis. MRP, micronized rubber powder and reclaimed rubber volumes grew by 21% and 7% respectively, while the rubber conveyor and rubber molded goods industry remained stable. On the infrastructure segment side, we recorded a modest revenue dip reflecting a deliberate shift towards higher value-added products. This strategic focus supported strong volume growth, with chrome rubber modifier volumes increasing by 80% on year-on-year and emulsion business growing by 15% on YOY basis. The consumer segment though reported 10% revenue growth, but despite a marginal decline in volumes reflecting the impact of price correction, demand outlook remains positive, supported by seasonal recovery following the extended monsoon and improving market liquidity, with consumer sales continuing to remain a key focus area. On the steel segment side, which remained stable with revenue increase by 2%, steel abrasive business steadily maintained, while revenue growth trailed volume growth due to volatility and the downward trend in the steel prices. Coming to 9-month financial performance, at a standalone level, revenue remained stable, while EBITDA and PAT margin expanded by 200 bps and 110 bps respectively to 16.8 and 9.6%, reinforcing TINNA's strong performance and sustained operational efficiency. At the console level, EBITDA margin improved by 110 bps, while revenue and PAT remained stable due to the net impact of initial startup costs and profits across associates, JVs and subsidiaries, which is expected to normalize in the coming quarters. Global Recycle Oman contributed 35 lakhs at the PAT level, while Borla Investment South Africa and Tinna Rubber Arabia reported a combined loss of 1.46 crores. EPR credit amounting to 23.9 crore is included in 9-month FY26 revenue, as against the EPR revenue of 24.4 crore recorded in the same month's previous financial year. Coming to
The line for the management has been disconnected. Please stay connected till I join the management back. Thank you for waiting patiently. The management line has been connected. So you can proceed.
Yeah, so Subodh is back again. So coming to the quarterly financial performance, consolidated revenue increased by 13% on YOY basis and 16% on quarter-on-quarter basis, led by higher tire processing volumes. EBITDA and PAT grew strongly by 53% and 57% on YOY basis respectively, with margin improving to 16.3% and 9.2%. Tinna Rubber is consistently advancing towards its Vision 2028, driven by disciplined capacity additions, focused capital deployment, global sourcing initiatives, and enhanced business integration. With a diversified product mix, a strong international footprint, and an experienced leadership team supported by continued stakeholder confidence, the company remains well placed to deliver sustainable long-term growth. I would now like to open the floor for question and answer. Thank you, and over to you, moderator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Kushal from Asian Broking. Please proceed.
Hello, am I audible?
Yes, Kushal, go ahead.
So my first question is, we have noticed that revenue per tire crushed has been falling. Like revenue Tinna Rubber makes for 1 metric ton of tires crushed. This percentage has been falling. Like we have calculated this. So is there any reason for this, sir?
Hi, Kushal. No, nothing specific actually. You know, our both the tire mix, the type of tires we crush, changes from time to time, as well as our revenue mix also changes. So we don't really look at numbers like that. It's an interesting observation that you have made, but I don't draw any special inference to this which has any impact to our business.
Okay, this basically depends on the quality of tires. So, okay. So my other question is, bitumen coming from Iran. So, is this being impacted with the ongoing Iran-US conflict?
Gaurav, again, we do not participate in bitumen imports. That's point number one. So we don't tend to track, how that impacts the business, because we leave that aspect to road contractors and bitumen importers. That's a very specialized business. Our interest is limited to modifying that bitumen, either which is produced in petrochemical refineries or on site of contractors, whatever be their source of bitumen.
Okay. Thank you, sir.
Okay, thanks.
Thank you. Before we proceed with the next question, a reminder to the participants, in order to ask a question, you may press star and one on your touchtone telephone. Before we proceed with the next question, a reminder to the participants, in order to ask a question, you may press star and one. We take the next question from the line of Divesh Jagat from Yes Securities. Please proceed.
Yes, hello sir, am I audible?
Yes, please go ahead.
Yeah, so can you throw some light on the life cycle study that you have initiated on the greenhouse gas emissions on the tires, and like what are the expectations of cost saving from the study?
Yeah, hi, this is Subodh here. So this study has been assigned to determine the current level of greenhouse gas emission. As we have accordingly have to align ourselves with the ESG goal going forward. So currently we have assigned the project with the QACA, wherein we shall be determining pick up from my yard to processing and converting it into the crumb rubber or micronized rubber powder or reclaimed rubber, and making finished good right up to my exit gate. Right. So this numbers will help us further to decide our ongoing, ESG goals for the next financial year. These are the requirements with most of the tire industry on the greenhouse gas emission coming out of the process and the product we are manufacturing. So this is nothing related to the cost side, but this is actually related to the ESG goals of the company.
Okay, sir. And my second question is regarding, are we exploring any global location for expansion, like other than the ones that we are right now expanding right now? Also, like, where do you expect your contribution of Oman in FY 26 and in FY 27 in the top line?
Hi, Gaurav Sekhri again. We expect Oman to, stabilize around annual revenues of approximately 30 to 36 crores, and its contribution will be about 5% in the overall, business of Tinna Rubber. We expect Saudi to be similar when it becomes fully operational and online, and South Africa, at least for next year or so, will serve the purpose of feeding into our recycling facilities by originating tires from there. So that is the plan that I can share with you as of today.
Okay, so got it. And my last question is regarding that you were expanding tire crushing capacity in India to 1.85 lakhs. So how is this progressing, and has the capacity increased to some extent in the current 9 months?
See, currently we have capacity to recycle around 185,000 tons of tires. Going forward, like as we have, outlined our vision 2028 to increase from 7 locations. Currently we are operating 7 to reach at 10 and to reach on the tire recycling capacity of 250,000. So that is in pipeline and it is progressing, in a right direction. So it is aligned with our 2028 vision.
Okay, sir. Got it.
Thank you. Before we proceed with the next question, a reminder to the participants, in order to ask a question, you may press star and 1 on your touchtone telephone. A reminder to the participants, in order to ask a question, please press star and 1 on your touchtone telephone. We take the next question from the line of Ashwath Rajan from Arihant Capital Markets Limited. Please proceed.
Hello, sir. Thank you for the opportunity. So my question was specifically on the PCMB business. I see on our presentation, we have forecasted 1,000 metric ton for Q4 FY26. I just wanted to understand what gives us this conviction, and based on 1,000 MT volume, what kind of revenues are we expecting for Q4?
Hi, Gaurav Sekhri here. See, we have been, we started our PCMB business, I think, a little over a year ago. And, it's a new space for us, but we see some complementarity between, tire recycling as well as polymer composites, master batches. And that is why we took steps to get into this activity. We have started seeing some green shoots, some good response. Repeat business from existing customers is good, which means our pricing, our quality is meeting expectations. And this has happened more so in the last couple of months. Therefore, we feel confident that now to scale up, should be compared to the last 1 year should be easier because, we have greater degree of understanding and confidence on our products. So that is why we feel we should be able to get to 1,000 tons.
Okay, sir. And how much does this translate to in terms of revenue for 1,000 metric tons?
Yeah, hi, Subodh here. So we expect the Q4 wherein we are estimating 1,000 crores of volume. So this comes out somewhere close to 7.5 to 10 crores in between, based on the product mix.
And I think to answer your question, next year this could be around 50 to 60 crores in top line.
Right? Which will be somewhere around 7 to 8% of our, next year estimated top line business.
Okay. And based on that similar number, if we scroll it down, if you go further below, how much does this give on an EBIT level and on a PAT level, the specific segment?
See, the EBITDA profile of this business at this point of time is lower than our overall, EBITDA profile of the company. But like I said, it is early days. I think I can only answer this question by saying one step at a time. and we have to steadily scale up, and then we'll be in a better position to give you a guidance.
Okay, sir. Got it. And if I were to ask, what is the volume target for 27 as an entire year for TCMB?
Approximately 6,000 tons.
Okay, sir. Thank you so much for answering my questions.
Thank you. Before we proceed with the next question, a reminder to the participants, in order to ask a question, you may press star and 1 on your touchtone telephone. I request participants, in order to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Kamal Jaiswani from UFirst Capital. Please proceed.
Yeah, hi. Thank you for taking my question. I wanted to know that what is the reason for this margins coming down this quarter compared to last September 25 quarter. So just wanted to know the reason for this. And out of the tires we are importing, how much are it's imported tires and how much is domestic procurement, and how much do we have the license for importing?
So Kamal, firstly, our margins are up compared to previous quarter, not down. And second, we are majority processing imported tires in our facility. And I think in terms of what licenses, balance, etc., it is too specific and also, I think, sensitive to our business, and we will not share that information.
Okay, so majority is imported, you are saying. Domestic, we don't procure too much.
Like I said, majority of what we process is imported.
Okay. Got it. Fine. Thank you.
Thank you. We take the next question from the line of Siddhi Kayal from Aditya Birla Money. Please proceed.
Hello, am I audible?
Yes, please go ahead.
Yeah, thank you for giving me this opportunity. I want to ask that, can you give us guidance on the performance of
Sorry to
shipping?
interrupt, Siddhi. Ma'am, your voice is coming a bit muffled. Could you please fix that?
Yeah, now is it clear?
We still have a challenge to hear you clearly, ma'am.
Okay, I'll fall back in the queue.
Thank you.
Hello.
We take the next question from the line of Karan Gupta from ACMIL. Please proceed.
Yeah, hi. Am I audible?
Yes, Karan, go ahead.
Yeah, so my question is regarding the demand side of the infrastructure segment, and what are the green shoots you are seeing on the consumer segment?
Can you repeat again, please?
My question is regarding the demand side of infrastructure projects. What is the demand scenario now? As you've noticed in quarter 1, quarter 2, due to infrastructure, the delay in the projects and also the monsoon side impacted our top line in quarter 1, quarter 2. Now,
so Karan, this is Subodh here.
Yeah. So what's the infrastructure thing? And the second piece is the consumer segment.
Yeah. So, I will try to answer your question. So in the infrastructure segment side, as you know, this year we have witnessed an extended monsoon. I think by mid of October it was a rainy condition. So normally, our consumer segment, which is all about wherein lot of rubber granules are being used for the sports turfing and the playground surfaces, that business, as well as the infrastructure segment wherein road laying, etc., happens immediately after the monsoon, and it continue to happen, in rest of the months. So only winter months are slightly impacted in the northern part of India. Otherwise, post-monsoon, the work infrastructure segment and consumer segment, especially the sports turf and all, it picks up. So we are witnessing some growth there, and that's the reason in Q3 you can see the volumes are up if we compare over Q2.
Okay. And the infrastructure projects that you said was delayed in quarter 2, quarter 1. Now it's picking up?
See, infrastructure segment is, the road construction business is actually the business, with monsoon seasons, typically 3 to 4 months. It's completely on halt. So the best progressing month are actually the February to July. But it picks up after the monsoon and then some effect of winter, that too only in the northern India states. Otherwise, it's continue to happen, from October to till next July.
Okay.
Yeah.
And second is on the guidance side. So FY26 guidance, 600 crore you were said in the last quarter is achievable right now or not? I think something 520 crore on TTM basis if we see. So what's the guidance for FY26? And then you've also mentioned next 3 years of guidance estimated something 20% growth. So what will be the lever in 20-25% growth? New capacity addition, or it will be your new value-added products? That's it.
Okay. So Karan, just to answer your question, I think you missed our quarter 2 earning call wherein we revised our guidelines for the revenue from FY26. So the same we are maintaining in the FY26. We have visibility of 8 to 9% of revenue growth over previous financial year. But as you know, there's a lot of capex has been done in the last couple of months to set up RCB and pyro plant, to strengthen the PCMB business and some of our overseas operations. So this all are at the level this all is going to contribute in the FY27. So we expect consistently around 15 to 18%, maybe 20% growth year on year from here onwards.
Okay. And for 27-28, the levers of growth, the guidance you already given in the PPT.
Yeah.
The levers of growth.
The levers of growth is the Varle we set up in the last 2 years, and now the PCMB business, now the RCB and pyrolysis business, and top of that the Saudi Arabia expansion and the full-fledged tire recycling operation in South Africa. These all are going to contribute in the next 3 years because all these capex are almost done except the Saudi Arabia, which will be ready by mid of the next financial year.
Okay. Yeah. Thank you.
Thank you. We take the next question from the line of Deepesh from Manya Finance. Please proceed.
Hi, am I audible?
Yes, please go ahead.
Okay. I missed the early part of the call. I joined in late, so if there are any repeat questions, kindly excuse that. What are the trends of raw material prices in Q3 FY26? Are they still high? And what is our percentage of import and domestic procurement of tire scrap in 9 months of FY26?
So, firstly, there is fair bit of, now stability in the price of raw materials and, even if there are some fluctuations in some kind of tires or in some origins because of the diversity that we have now in our business of, being able to process multiple kinds of tires from different origins, we are able to control it reasonably well as of now. So the short answer is there's fair bit of stability. And second, in terms of tires that we process, we continue to process majority of the tires which we import. That's what we can share with you on this call.
Okay. And I missed on to the guidance which was given for FY26 of top line and bottom line. And what will be your guidance for FY27? And are you confident that you will be able to achieve your vision 2028?
See, we have to go with the assumptions that the capex underway will give us the desired results. And with that assumption in place, we continue to be confident that Vision 28 of 1,000 crores is possible. That's point number one. And we expect to finish this financial year FY26 between 530, 540, which is in line with the revised guideline we were giving in Q2. And in the coming financial year, we are still locking down on our business plan and numbers, but with the assumption of our RCB pyrolysis plant commencing production, etc., I believe we will be very close to 700 or over 700 crores, around 700 crores FY27.
Okay. And please let me know what is your current working capital days as of now of the 9 months, and do you expect it to be the same going forward?
So we are operating at around 50 days currently, and we don't expect that to change going forward.
Oh, sorry, I missed the number. How many days?
50.
50. Okay. Thank you so much. Yeah.
Thanks.
Thank you. We take the next question from the line of Yash Purbe from Inved Research. Please proceed.
Yeah, hi. Am I audible?
Yes, please proceed.
Yeah, so thank you for this opportunity. So, firstly, on the capex side, so sir, are we on track? Like earlier, we had guided that by Q4 the trials will be completed. So, are we on track? Have we received all the approvals, or are we facing any challenges or any delays?
There are always some challenges in doing a capex in a project, but nothing which we are unable to manage. It is proceeding quite well, and we expect to commence trials on the pyrolysis plant certainly within Q4 and the RCB plant in Q1 FY27.
Okay. So, sir, are we expecting any revenue in Q4 from these projects?
Your question is, are we expecting any revenue?
Yeah.
From the current capex?
Yeah. In Q4.
In Q4. Yeah, I believe so. Towards the end of Q4, some small contribution could begin. But irrespective of that, our earning, our revenue guidance of around 540 crores is we are confident of getting that number.
Nice. Sir, I just wanted to know, like, we have guided around 8 to 9% of the growth for whole year, but if we compare for 9 months, we have done only 3% growth. So in Q4, we would have to do nearly 20% of growth. So are we confident of achieving this growth in Q4?
Like I said, 540 crores revenue for FY26 is within our reach, and I believe we'll deliver it.
Okay. And sir, lastly, one question on, like, by when do we expect the South, except from Oman, other international projects to contribute positively?
Oman has already begun contributing positively again. We saw the turnaround in the business in November, further consolidating nicely in December, and we think January we should see even better performance from Oman.
And sir, other international projects like Saudi Africa and all?
South Africa will take some time. South Africa, we continue to incur some loss, but it's a new complex market. It will take, I think, another few months to stabilize. It is my estimate, and I think we had mentioned that in our opening speech, that we expect South Africa operations to begin breaking even from Q1 of FY27.
Okay, sir. Thank you. Those were my questions.
Thank you. We take the next question from the line of Manish, an individual investor. Please proceed. I would request Mr. Manish to unmute and then speak. We will proceed with the next participant. We take the next question from the line of Puneet, an individual investor. Please proceed.
Hi, I'm audible?
Yeah, Puneet, please go ahead.
Okay. So my question is, a lot of Indian tire manufacturers are announcing CapEx for the next 2 years, and we have a EPR policy also. So I want to hear your thoughts, how much upside impact that would cause in the next 3-4 years for our company. And the second question, if you can take right away with this is, how is the raw material impact is hurting us? Can you bring it down for us in terms of impacting the tires at a lower price? So these are my two questions.
So, if I've understood your question correctly, I think your first question was that tire companies are expanding capacity. How will that impact us, correct?
Yeah, along with EPR policy.
So, firstly, in regards to, it is good news for us. If more tires are made in India, that means greater demand for our recycled rubber materials. As you know, we are approved with all, I would say, of the leading tire manufacturing companies in the country. So that is positive for us and will have positive impact on demand. In regards to EPR, I think, the two things are not so connected. When we recycle more tires, we will generate more EPR, and if tire companies are producing more tires, they will need more EPR. So, that's how this whole ecosystem is built.
Okay. I got it.
Okay, thank you.
Raw material for
I didn't hear you. Sorry?
Second question is on the raw material. So our raw material cost is increasing. So what are your thoughts to bring it down in the coming years?
Our raw material costs are stable, especially since last 2 quarters. We have increased optionality on the types of end-of-life tires we process as well as on origins. So therefore, I don't expect any adverse impact on account of raw material to our gross margins.
Okay. Thanks once again for taking the question. Congratulations.
Thank you. Thank you.
Thank you. We take the next question from the line of Kushal from Asian Broking. Please proceed.
Sir, sorry to repeat this question, but just wanted to know, these tires being imported from South Africa, they are probably high quality tires like SUV or truck tires, right? Just wanted to know.
We are importing, various kinds of tires from various origins. And South Africa is no different. We are bringing in tires which are passenger car radial as well as truck bus radial tires from South Africa.
Okay, sir. Okay. Thanks, sir.
Thank you.
Thank you. We take the next question from the line of Ashwath Rajan from Arihant Capital Markets Limited. Please proceed.
Yeah, hi team. Thank you for the follow-up. So I had 2 questions. Since now we're already done with the capex in South Africa, I just wanted to understand the incremental capex of 50 crore. What would this be centered towards?
So the incremental capex of 50, some of it will continue to go to just finish the existing works, that are ongoing, especially at the Varale and Maharashtra site regarding RCB Pyro. We expect to spend approximately 20 crores in Saudi Arabia, and at least another 5 crores I expect capex will be incurred in South Africa in the near future.
Okay. And my second question is, what kind of annual costs are we expecting on an year-on-year basis? Because since now we are closer to source, like we are closer to the source of raw materials, what I mean is South Africa, Middle East. So what kind of annual savings are we expecting now?
See, savings come from overall scale and efficiency. There are various things at play. South Africa, while we are closer to the origin and we can process there, there is higher cost of processing, with labor and power being more expensive there. So it is very hard for us to tell you today specifically what savings will come from each such initiative. But certainly scale will give us greater efficiency both in logistic costs as well as efficiency in terms of spreading our fixed costs better.
Okay. And so just wanted to understand, since our final product is pellet, does this pellet come from, say, from South Africa back to India, or do we export it from South Africa to other markets?
At the moment, I will clarify, we are only doing semi-processing of tires in South Africa, and the semi-processed material is coming to India for recycling. So that is the current setup.
Got it. Okay. Thank you.
Thank you. Before we proceed with the next question, a reminder to the participants, in order to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Siddhi Kayal from Aditya Birla Money. Please proceed.
Hello, am I audible?
Yes, please go ahead.
Yeah, thank you for the opportunity. I want to ask, can you give us please guidance on the performance of TP Buildtech and what top line are you expecting from the same in FY27 and FY28?
Hi, Gaurav here. I think your question is specific to TP Buildtech, correct?
Yes.
So TP Buildtech, we expect moderate growth in this financial year. In TP Buildtech, as of now, we are at revenue of 56 crores versus 61 crores last year, so we are a bit behind. We expect to finish the year at par or maybe slightly higher than previous year. We are expecting a good Q4. In regards to future, we have done some, good work and in this financial year in terms of laying the foundation for growth for the next 2 to 3 years. One of them being, we now have a plant in eastern part of India near Calcutta to make the concrete admixtures. Earlier, historically, we only had 2 facilities, one in North India and one in West India. So this initiative in East will certainly help with growth in the coming financial year. That is one. And second, we have hired a new team and set up a new line of construction systems products such as accelerators and grout repairs. We are now beginning to sample our product with customers, get some approvals and accreditations. We are very confident that we will see impact of that also in the coming financial year.
Yeah, thank you so much. That was very helpful. And just one another question is that how is the order pipeline looking for in Q4 FY26 and FY27?
Ma'am, just speak a little bit more clearly. I'm having a little challenge understanding all the words that you're saying.
I'm asking that how is the order pipeline looking for Q4 FY26 and FY27?
Sure. Okay. So that is looking good. I think one of the reasons why we also had lower margins in current financial year is because, our own product mix basis, because of the pipeline that we had changed, we sold less of the higher grade and more of the lower grade materials. But looking at the pipeline, we are, it's looking good. We have a good set of customers, lots of them with whom we have now worked for, almost a decade, and they further have good projects. So as of now, it is looking good.
Yeah. Okay. Thank you, sir. And one last question is that you mentioned that you have kept aside 5 crores for R&D. So are you looking for any new verticals other than rubber recycling?
Ma'am, we see opportunity for finding adjacencies within our existing business, within the scope of recycling tires and new applications of rubber, as well as the polymer composites business and the master batch business. So this money is earmarked for finding new applications and adjacencies to our existing business. We are not at the moment considering, getting into, construction demolition waste or battery recycling or something which is completely unconnected.
Yeah, okay. That was very helpful. Thank you so much.
Thank you.
Thank you. Before we proceed with the next question, participants, in order to ensure that the management is able to address questions from all the participants, please limit your questions to 2 per participant. We take the next question from the line of Vatsal Shah from Knightstone Capital Management. Please proceed.
Yeah, hi. Thanks for taking my question. So I wanted to know the current cash balance available with the company and the debt repayment plans for the next 2 years.
So our current cash balance is approximately 5 crores. And what's the second part of your question?
The debt repayment plan for the next 2 years.
How much of our debt repayment? Maybe Abhay, you can help me with that. 10 crores per year. Approximately 10 crores a year.
10 crores, okay. And the second question would be that we are looking to extend our capacity to 235,000 tons. So that includes everything, right? The RCB plant, the PCMB plant, and every vertical we are going into.
Yeah, I mean, the everything begins with tire recycling. The capacity of recycle, and then those are all downstream, processing options. Either one can go into, making reclaimed rubber, micronized rubber pulp, etc., or one can go into pyrolysis and RCB. So we are just adding more and more optionality to our business. But everything begins with recycling of tires. So that is where we expect in the near future our capacities to be around 235, 250,000 tons.
Got it. And the EBITDA margins are similar across verticals, right? Like there must be some difference, but it is comparable, around 18% or so.
Around 16% as of now. We desire to go to 18%, and of course, work is being done in that direction.
Okay, that's it from my side. Thank you.
Thank you.
Thank you. We take the next question from the line of Raghav Bansal from PDNL Capital. Please proceed.
Good afternoon, sir. My first question is, how does the reduction in GST on tires in India affect the tire recycling ecosystem?
It has no major impact on us, frankly.
Maybe some demand will increase and we are benefit only. Because due to lower GST, there will be more demand, and then more demand for their raw material and more demand for our finished product.
Right. So it will not affect the replacement, or it will not bring a new trend of too much replacement in the existing tires?
Even if that happens, that only supports our business. But I don't expect it to move the needle in any substantial way.
Okay, fair. And second question, how has the recent infrastructure policies in the budget affected the ecosystem for us in any way?
I think government's focus and spend on infrastructure has remained, there for the last 5 years. Every year in the budget also they announce something new, some mega projects. This year there are 7 new freight corridors that have been announced, and expressways, etc. So all of that supports the need for infrastructure in the country, and we are, aligned with that.
So there is no specific mandatory requirement for a minimum amount of tires, percentage of rubber to be used within roads as a policy, is it?
The old mandate and guidelines remain in force, which is for high traffic roads, government continues to recommend use of modified bitumen.
Thank you.
Thank you.
Thank you. We take the next question from the line of Manish, an individual investor. Please proceed.
Hi, sir. I'm audible?
Yes, Manish, please proceed.
Hi. I have two queries. My first query is, if I check your investor presentation, the Q3 FY26 EBITDA margin has decreased from the last quarter. Last quarter, we were at 18.5%, and this quarter we are 16.3%. So what's the reason behind it? And the same goes with PAT. PAT is reduced from 10.6 to 9.6.
So on the EBITDA, it is largely because of EPR. We had some EPR credits which we accounted for in the previous quarter in one go, because there was some lag in the reflection of those credits at the EPR portal of the government. So our policy is only when the EPR credits start showing on the portal, we start accounting for them in our books. So that caused a little showing higher EBITDA margin than what we actually achieved in previous quarter. And this quarter, it is only accounted for one quarter, which is this quarter of Q3.
Okay. Thanks for the clarification. And I have two more queries, if I can ask. I don't know. The first query is, we can see the auto sales increasing a lot, right, from the last quarter. So if we have more auto sales, we might have more tires. So will the raw material price be reduced? I mean, will it reduce a bit going forward?
No, I would not draw that conclusion. You said higher auto sales, right?
Yes, higher auto sales, right? We have two-wheelers, four-wheelers, commercial vehicles, passenger vehicles, everything. Yep.
So that is good for us. So more vehicles on the road means more tires are being put to use.
Correct.
Which means more.
So the raw material price will decrease, right?
No, I wouldn't jump to that conclusion also, but what I would say is that we can certainly conclude that there is more business for everyone to do.
Okay.
That's basically, I'm Subodh. Yeah, Manish, Subodh here. So if you see, couple of quarters back, the tire industry was bleeding. And with the reduction in GST and some of these measures, the tire industry has started improving on their sales sides.
Yes, sir.
So that's the reason even, the all tire industry sales are, improving every quarter now.
Yes, agree. Sir, and my third query is, sorry to be specific, when we started the year, we guided for 20% revenue. Last quarter, we guided for 12 to 15%, not 8%. And this quarter, we're guiding for 8%. So don't you think we should have a conservative guidance, not to overguide something?
No, I think there is some gap, Manish. In the quarter 2 earning call itself, we gave the visibility of, 7 to 8% growth over the previous year revenue.
Sir, I have the call recording and the transcript shows that 12 to 15%. That's the reason I ask.
Manish, Gaurav here. We give a guidance to the best of our ability to what is realistic. We have been giving that for the last many years. In most cases, we are within 5% of our guidance. This year, we are within 7-8% of our guidance. So, it is a guidance at the end of the day. And I think when you also listen to that, and then quarter on quarter, we are also updating you, I think that is where, you need to consider all the facts and then draw your own conclusions.
Yeah, I agree, sir. I just wanted that should we be more conservative in giving the guidance, just to be on the safer side.
I believe the way we are giving our guidance is accurate and to the best of our ability. I don't see us making any change to that.
Okay, no problem, sir. All the best, sir. All the best. And thank you for taking my queries, sir.
Thank you. We take the next question from the line of Kamal Jeswani from UFirst Capital. Please proceed.
Yeah, thank you. Couple of questions. Firstly, with this pyrolytical oil plant starting, can we expect some margin improvement once this starts?
See, we expect the pyrolysis RCB business margin profile to be very similar to the material cycling business that we do. So it will be similar. I think overall efficiencies for the company will come because of scale and other logistic benefits, etc.
Okay. And regarding TP Buildtech, I think we are holding some 49% stake, 49 point some stake.
Correct, sir.
We are expecting it to cross 51% to make it a subsidiary, wholly owned subsidiary. I mean, can we expect
we haven't, we are not considering that as of now. I think will be the most accurate way to answer your question.
Okay. And I think I missed the answer you must have mentioned, I guess. We are currently at 15% capacity utilization, and how much are we expecting scale up in the capacity utilization this year and next year?
I think your question is to the TP Buildtech's new plant, right?
Yes, correct.
Yeah. I think that, we are already factoring in, to go to about 35-40% utilization in about 6 months. And then, of course, we'll continue to make efforts to make it even better. But in the near future, that is where I'm seeing the utilization.
Okay, got it. Thank you so much.
Thank you. We take the next question from the line of Karan Gupta from ACMIL. Please proceed.
Yeah, hi. Can you share the segment-wise margins in dollar terms?
We don't share this data, current segment-wise margin.
Okay. But if you can share comparatively segment-wise, which segment is higher or which is lower, something like that?
The margin profile of infra and industrial is comparable, and the margins in the consumer segment are slightly lower.
Okay. And okay, fine. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for the day, and would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you, everyone, for organizing the call today, to the organizers, and of course, my gratitude to all the people who participated and have shown interest in our company. I wish you a very good evening and a happy, healthy year ahead. Thank you.
Thank you. On behalf of Go India Advisors LLP, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.